Hello and welcome to episode of the Talking Central Banks podcast with me, Karan Verishi. This platform is exclusively dedicated to everything central banking, monetary economics, and policy technicals for observers across the world. Today, we will do our ASEAN plus China roundup, focusing on Asian macros. Our guest tonight is Priyanka Kishore, a senior economist based in Singapore. Priyanka is the founder and principal economist of macroeconomic consultancy Asia Decoded. With 2 decades of experience across Asia, she advises policymakers, think tanks, corporates, and institutional investors on the interplay between geopolitics and economic shifts spanning trade dynamics, regional integration, supply chains, climate policy, and debt sustainability. Previously, Priyanka was the chief India and Southeast Asia economist with Oxford Economics and held various economist and strategist roles in the banking sector, where she built her reputation as an expert on Asian markets. She is also a columnist with Nikkei Asia and appears frequently in major print and television media outlets. Welcome to the show, Priyanka.
Thank you for having me, Karan. It's a pleasure to be here.
The pleasure is all mine, Priyanka. So, Priyanka, let's start with the hot topic, that is the GDP to the debt to GDP ratios across ASEAN regions. How do you see the evolution of these ratios in ASEAN, along with China, Japan, and Singapore after the COVID-19 pandemic over the next 3 to 4 years?
So,
Apparently, China's debt to GDP ratio has increased from about 25% to around 85%, if I remember correctly. Uh, it was about 50% 2016.
you've mentioned the anchor correctly, Karan.
Mhm.
All these debt to GDP ratios on the public debt side, they started blowing out at the pandemic, right? When the extraordinary measures came in from these governments to support growth. And while we have seen some consolidation efforts come in, depending upon which country you're looking at to different degrees, what is true is that debt is still quite elevated. In fact, in China, we are again seeing fiscal expansion happening because of the slump that the economy is. And so debt has actually been rising in some of these places, especially in outside of ASEAN that you mentioned, China, Hong Kong, even Japan, the debt remains pretty elevated. In within ASEAN, the core ASEAN economies, debt has risen, but in most cases, it stays at a very manageable level, so below 50% of GDP. I'm talking specifically in a public debt perspective. Private debt is also not that alarming. But what is there is that in some of these countries, Indonesia, for instance, what they're doing is they're channeling their spending through the state-owned enterprises, the public sector, and when you tack up that debt on top of Indonesia's general government debt, which is only about 40% of GDP, the number shoots up to 77%. So in that perspective, sometimes the publicly available figures for general government actually do not show the clear picture or the right picture. Debt is definitely a risk that needs to be monitored, and governments should be looking to lower their debt levels because they're getting into a state where interest payments are accounting for more and more of their fiscal expenditure.
Staying with Indonesia, Priyanka, I'm keen on having your views on President Prabowo's move on Indonesian tycoons. As far as policy is concerned, would this undermine the Indonesian central bank's credibility, in your opinion?
I think Indonesia is generally going through an erosion of confidence in institutions ever since President Prabowo has come into power. Partly this is because of the way he has been rolling out policies a bit haphazardly, coming in too quickly, and in some cases, of course, he's had to roll them back. That led to the street protests that we saw last month, and he has only used this opportunity to actually strengthen his political power through a cabinet reshuffle, and he's looking for any source of revenue that he can to finance his priority projects, which is basically the free school lunch program, a $29 billion program annually estimated by the World Bank, and the budget for that is shooting through the roof over
Mm.
next year, at least projected to. Then he has the Danantara because of which he has made massive efficiency cuts in other parts of the departments, and still because he's worried that he doesn't have enough money, he's now coming after the tycoons. I think this is a dangerous situation that is evolving in Indonesia, and unless we see some better governance coming in pretty soon, we could be at the risk of, if not a meltdown, then at least a sharp growth reset. Indonesia, which has, over the last 20 decades, delivered decent growth of 5%.
Right.
But now, instead of, raising it to 8%, which is what President Prabowo's ambition is, there's a growing risk that it actually slips towards 4% or lower.
Right. I think Indonesia is probably the only country in Asia which has a very consistent 5% real GDP growth over the last decade, if I'm not wrong, Priyanka. They're
Yes,
pretty
yes.
consistent as far as growth is concerned.
Either consistent or just good display, because often we have seen that the bottom up indicators tell a slightly different story than the
Mm.
top the national statistics is pretty clear in case of private consumption. So private consumption
Mm.
also grows at 5% in Indonesia. For
Right.
the longest time it has grown like that. But
Mm.
while that has happened, what we have seen is that vehicle sales have steadily decelerated over the last couple of years. This is not just
Mm.
1 or 2 months. Retail sales are also now showing a declining trend over the last 4 months or so. And
Mm.
consumer confidence, it's taken a big beating because of the jobs outlook. People are not really very secure about their incomes and job prospects. In that
Mm.
kind of an environment, it's really hard to believe that your private consumption growth is so stable. So
Mm.
stable. So I would say take it with a pinch of salt.
Yeah, because if I read correctly, no way for me to interact with Indonesian citizens, but the way I read it is that the wage growth is not that significant in Indonesia. So consumption cannot really grow at 5%. And that has always been my major concern about the economy.
Yes, indeed, that was one of the points that has been put across by the protesters in the recent riots. They have
Mm.
raised issues like the government is ignoring their standard of living concerns. The middle class is actually shrinking in
Mm.
Indonesia post-COVID. So there are a lot of challenges across income brackets that are playing out, led by minimum wages are very very low in Indonesia, and once you account for inflation, there's barely any real income growth. So that actually comes down to, instead of addressing those concerns, the Prabowo administration is very fixated with achieving 8% growth no matter what. Now you might achieve 8% growth or you might grow at 5%. The question
Mm.
at this point in Indonesia is how equitable is that growth?
Right, right, agreed. Coming back to debt management, Priyanka, China and Japan are the two major non-US economies holding US treasuries, and both are from Asia. So how likely do you think will the US debt crisis, if it happens, have an impact on the Asian debt market?
The US debt crisis, that's
Hmm.
would be like the, I don't know, the event of the decade or something if it
Yeah, yeah.
happens, of course. I mean,
I mean,
but
if
again, the US is sitting
yeah.
at like humongous debt and just
Hmm.
just piling on us as well. So
Hmm.
the concerns, I guess, are lingering. I would
Hmm.
think, Karan, that there would be the normal financial contagion channels will definitely play out, because if the US defaults or if there's a crisis in the
Hmm.
public debt system in the US, that has to have very big ramification in terms of the confidence in the US itself, the confidence in the dollar itself, but also it will have general flight of capital implications. So to that
Right.
extent, yes, the immediate reaction would be capital leaving Asian shores. Currencies might also initially at least depreciate in a knee-jerk reaction, and
Hmm.
countries which have probably high exposure in terms of external debt to FX risks, they might come under the scanner. But I
Hmm.
would say that the region is way more resilient than it was during the Asian financial crisis. And
Hmm.
so these
Hmm.
contagion risks might be just, the first degree of impact. I don't want to comment on, how deep it might be. But again,
Hmm.
it might not be the long lasting impact, because eventually, as I said, there would be a loss of confidence in the dollar. And then comes the
Mm.
debate of reserve currency status. And maybe,
Yeah.
that has some winners in the region. There is renminbi, there is the rupee as well, which is making those
Mm.
efforts. So we could
Mm.
see some of those gains at least coming through a basket of currencies gaining ground against the dollar as reserve currency. There would be a
Mm.
second channel also because US growth will obviously take a beating. And
Mm.
as of now, it still remains a prominent demand source for Asia. But again, thanks to the Trump administration, diversification efforts are significantly underway. We are talking about probably an event 3 to 4 years down the line. And by that
Mm.
time, it could happen that the region is much less dependent on US demand. And it's actually the third markets like, EU, GCC, Africa, which matter more. So
Mm.
yes, just to sum it up, you would see the financial contagion channels, but I would not say that we are going to see a repeat of the Asian
Mm.
financial crisis.
Mm. My view, Priyanka, is that the debt crisis might not necessarily mean that the US would default. I think it's more to do with the safe haven flight that would happen from ASEAN and other major Asian economies. And that would have an impact on the financial markets. So I'm more concerned about the capital flight than any economy defaulting. And I think after the 96 ASEAN crisis, the Chiang Mai initiative, as you were mentioning, the collection of currencies which could be used as a buffer when an event like this happens to prevent something that happened during the ASEAN crisis would help. But I'm not really sure whether the Chiang Mai initiative is as effective as it is made out to be.
You don't hear about it much anymore in
Mm.
the region, but
Mm.
AMRO was formed as well in the aftermath
Right.
of the Asian financial crisis to monitor these risks. So there have been institutions and measures put in place. I think there were also a lot of channels put in between the Fed and the regional central banks also to facilitate dollar payments, which came in the aftermath of the global financial crisis. So there
Mm.
are there are existing channels in place which I think could be quickly uh, put into place if there is a significant crisis coming through. But again,
Mm.
I think if the US itself is the source of default, then, oh, sorry, a debt crisis, not a default, but even a debt crisis, a sell-off, the question is that where does the money go eventually? So yes, there's always an initial knee-jerk reaction about flight of capital, but the longevity of that
Mm.
staying. I'm just saying that, if the region is more resilient, less dependent on the US, even economically, so you are financially and economically resilient, this does
Mm.
not play out for too long.
Mm. Speaking of which, Priyanka, do you think China and Japan may start to liquidate their US Treasury holdings anytime soon? I mean, I know they're diversifying now, and I think all countries in Asia are doing that. But how do you see its impact on the overall market if this happens?
It's a price question, Karan. I think I'm asked this every other week, at least by somebody or the other. It's top of the mind. The Japan did not do itself any favors because when they were
Mm.
initially negotiating the trade deal, they dropped things like we will leverage our trillions of holdings of USTs to get something out of it, and then immediately walk back on it because I guess they were told off by the US, and they also realized they could destabilize the market significantly,
Mm.
which would also hurt them because they are the holders, and if the prices drop drastically, they would be
Mm.
at a loss as well. I think right now the way situation is, the way talks are progressing on both sides. On the China side, it's a bit more positive. Japan keeps running into hiccups, but still, nonetheless, they do have an agreement. I don't think they are going to weaponize the USTs to get back at the US at this point of time. There will be a
Mm.
creeping diversification. It's only warranted, and I think maybe they're not doing it enough given the risks that are attached to the US Treasuries. But there's also a paucity of safe products. Where do you put that money once you take out of it? And that has something that the Bank of Japan has mentioned as well, that what are the alternative investments that we have available if we get rid of USDs. So I think both from a geopolitical perspective, where they would now want to take things with the US at a very, very next level by doing this, and also
Mm.
because of the practical limitations they have in terms of, if you liquidate your big USD holdings, where do you actually park that cash? That's
Mm.
not going to be a bazooka event. It will remain what it is in terms of creeping diversification, is my view.
Okay. Some leading indicators are suggesting that industrial activity in Asian region is likely to weaken. How are regional central banks expected to respond in order to stimulate growth, given the fact that the fiscal space is rather limited right now, Priyanka?
So let me start by saying that right now we are in a very sweet spot because growth has outperformed all the projections that were put forward, even for Singapore, which is the most exposed to external risks, even though it was hit by
Mm,
only a 10% tariff. The trade to GDP ratio is
mm,
like 300 plus. But they've done amazingly well thanks to inventory stocking in the US. Front loading of exports has happened from
mm,
here, and the tariff chaos, that even if you think the tariffs have come very quickly, they were supposed to come in April, they're still not completely in place. We still have a lot of
mm,
exemptions going through, which means not all of exports are being hit, and effective tariff rates are still way below where they're supposed to be. They're much higher than end of last year, but they're way below where they're supposed to be. And you have the tech cycle that's also aiding
mm,
some of these countries like Singapore and North Asia particularly. So the region has so far done quite well in terms of growth, and the central banks have been proactive in easing rates in many places, despite
mm,
the Fed not cutting. So we've actually front run the Fed. Indonesia has cut by 100 basis points, Philippines cut by 75 basis points. It's only Japan which has been holding out because it also has an inflation
mm.
challenge. But other than that, everybody has already put in a easing cycle in place, so they can afford to wait and watch a bit. And the other thing is that thanks to low inflation, they can also still cut more. So at this point of time, the monetary cycle can run further. The question, of course, becomes about transmission. If you
Mm.
keep easing, then does it really get transmitted beyond a point to lending rates? Because of which I'll go back and link it to the first question you asked me about debt ratios. I do think that these countries will end up again also leaning on fiscal, and we are seeing that happen as well. Packages are being announced, and small announcements are coming through, which do not really grab media headlines to that extent. But for example, Indonesia has a widening of the fiscal deficit projected next year from this year to 2.5% and so. And of course, it's a slightly special case, but it will probably overshoot that target. So we are seeing that monetary cycle has done the heavy lifting. It might continue to ease, but more targeted support is going to come in if we see growth slow down materially in the future. For now, growth has done well.
So that brings me to currencies, Priyanka. Uh, if we, uh, I mean, we can agree to disagree, but stabilizing currencies will be another tough task for central banks across ASEAN. How are they going to ensure this along with maintaining growth and inflation, in your opinion, given the fact that you said that the region is in a sweet spot right now?
It does depend a bit on the dollar as well, Karan. So far,
Mm,
the currency movements have allowed central banks to ease. They were strengthening it. They did not need to worry about spiraling depreciation pressure coming in because of easing.
mm,
It has helped them through. So in future, if they continue to have that kind of support in place, then it would not be a concern. But of course, if we go through a dollar strengthening regime coming in where currencies come under pressure, then they would have to go back to their old playbook of deploying FX reserves to manage the currency while looking at the policy rate. I would say
mm.
if growth risks dominate, then they would still ease, but probably the pace would be impacted by what's happening with currencies, but they would deploy the reserves.
After the ASEAN crisis, Priyanka, the region has been much more integrated. And I think we see that happening, given the fact that we have seen a lot of initiatives pertaining to currencies and regional trade agreements that have occurred over the past decade. But how do you see the regional collaboration among Asian countries in the evolving uh, global geopolitics as it pans out? Do you see the collaboration to be much stronger, or this would elevate competition among these nations?
A great question. On paper, we are all saying we want to be more regionally integrated. There's definitely scope to be
Mm,
more regionally integrated. If I just look at ASEAN itself, then
mm,
intra-ASEAN imports, countries buying from each other is now lower than countries buying from China. So China
right.
has become, the dominant economic influence in the
Mm,
region, and it's true for the rest of Asia as well. In
mm,
practice, we are not seeing this collaboration coming through. Everybody is
mm,
doing bilateral deals with the Trump administration with an eye to undercutting each other on tariffs. There's clearly that race to being China plus one still. Who is going to attract the next wave of supply chain diversifications happening from China? So while we understand that it will probably be in everybody's benefit to put up a united front so that we have this block which can stand away from both US and China and sort of exert its own economic influence and decision making and leverage itself, I don't think that vision is going to translate into reality. At least I don't see it happening beyond the rhetoric. The countries compete with each other, as you said.
yeah,
There are a lot of
exactly.
similarities in the products that they export, and
Mm,
that comes in their way of, and not just what they export, what they want to export. Everybody wants to move up the tech ladder and becomes a high
mm,
value exporting country. So that
yeah.
comes practically in their way of collaborating with each other. So this is really something, is a wait and watch situation. It requires political will. The mechanisms are in place. So ASEAN has worked towards lowering all its trade barriers in terms
Mm,
of tariffs and all. It's the non-tariff measures which are currently in place, which we've seen that the Provo administration has offered to the US to do away with its local content requirement. We are
mm,
expecting to see the SEPA with the EU come in this week or next week, and
mm,
all eyes will be on what happens to the local content requirement there. Now, if you're going to do it with third parties, will you do with it with rest of Asia or
mm.
not? So, with the right motivation, this can happen, but I think the political will is still not that strong to make it happen.
And I also think, Priyanka, that irrespective of what is happening globally as far as geopolitics is concerned, I think everybody in the ASEAN region wants to take the lacuna that China is now leaving as it moves up the value chain, as you were just mentioning. So I think there's a lot of competition among ASEAN regions to take that space. I think Vietnam and Thailand are pretty in a pretty good space right now to acquire that space that China is now vacating. But I think almost everybody in ASEAN is talking about that right now.
Yes, it's true. I mean, one way out of it would be if you could create economic clusters and define,
Mm,
certain sections or certain SECs which actually ban these one or more countries like Malaysia and Indonesia have done,
mm,
Singapore have done in terms of data centers,
yeah.
the Johor
Mm,
Bahru
mm,
SEC which has come up. That's where, the data centers are going to come up. So that is one
mm,
way out of it. You can come up with economic clusters so that the gains are not really with one country and there is
mm,
cooperative sharing that happens. The challenge,
mm,
of course, is a country like Indonesia, which is still stuck as a commodity exporter,
mm,
and partly because maybe it did not do enough to do its own reforms, raise its productivity to move up the value chain. It's and partly because the demand also did not come through. It went through another route of nationalism where it's saying we will not export nickel ore but only process nickel, and it's creating a captive market for yourself and raising a trade barrier, which I think
mm,
it's hurting it in the end, because if you look at its manufacturing share in GDP, that's only gone down. All these inward looking measures have not really helped Indonesia. So again,
mm,
it really is about, where your government's policy making is coming from. The gains are there.
mm,
You can find ways to work around it even as competitors. You can choose where to cooperate and where to compete. You don't need to
mm,
compete in every sector, because eventually there is a resource constraint. Vietnam is running into resource countries. It does not have a 1.4 billion population or a workforce as large of India or a supply of managers as large of India, which is why one
mm,
reason is that why firms from Vietnam are now thinking, when the next wave of expansion comes, we should be
mm,
looking at India. Now, of course, there's a whole lot of different set of challenges. Let's not get into that. That's another
mm.
podcast altogether, I guess. But that's it. So the ones who are
Mm,
ahead in the race, they're already beginning to hit some constraints, and
mm,
they would be willing to, ideally should be willing to cooperate and create partnerships. And I do think Vietnam is willing to create partnerships even with India, but not
mm,
everybody, I think, is that far-sighted.
right, I agree with you. Based on the global agency's projection, ASEAN region growth is likely to soften by 30 to 40 bips, but inflation is likely to increase by almost 100 bips as compared to the previous year. How do you see the monetary policy in the ASEAN region especially pertaining to the respective central banks to manage the situation, Priyanka?
Inflation goes up, and I do expect it to go up in certain places as well. I don't think it's going to go up to alarming levels. In most cases, it is just coming back from
Mm,
very low levels. In fact,
mm,
in Thailand, we were experiencing deflation earlier in the year. It's
mm,
normalizing, I would say. It's coming back towards governments, central banks' comfort zones. And
mm,
the reason I don't see a huge upside risk partly is because of the Chinese imported disinflation that this region
mm,
is going through. It is a large importer of cheap Chinese goods, which helps keep a lid on prices. This might change eventually because of domestic protests and pushbacks, but it's not really that easy to raise
mm.
barriers against your biggest trade partner and a large source of investments into your region. So from an inflation perspective, I am not really that concerned, even if it goes up and normalizes. I think it's a good thing because central banks here were getting a bit too comfortable with low inflation, which again, comes with its own set of challenges if you let inflation slip and slip and slip and don't do
Right.
much about it. So I would think we see status quo for most of next year because you've already eased, you've done a lot of easing in terms of what has happened, and you're going to wait to see how monetary policy transmission plays out over the next year or so.
Mm,
If growth really tanks instead of moderating, then I would think that the risk would be towards more easing, even with a slight coming back of inflation. And that actually brings us back to also central bank independence that we were talking about before the podcast started.
mm.
Some central banks in the region might be forced to do so. They do not have their own choice in terms of
Right.
whether they need to prioritize growth or inflation risks, which is a
Mm.
recipe for disaster.
Yeah. Coming to your home turf, Priyanka, Singapore. Among the Asian economies, Singapore GDP growth outlook seems to be weaker as compared to its Asian peers. Would mass easing strategy be effective in reviving growth at this time?
So as you know, current mass follows a different growth revival easing central bank strategy, which is dependent on FX. It does not manipulate an interest rate. It manipulates the SGD near, which is the SGD versus a basket of its trading partner currencies, and it
Mm,
indicates whether it wants it to appreciate or depreciate in a given band. The reason it
mm,
chooses to do so is because of Singapore's extraordinary dependence on trade. It is
mm,
not just domestic exports, it's a huge center for re-exports, which means that ships from other countries come and dock here, and then
right.
Singapore is center for that, going to other parts
Mm,
of the world, which takes total trade to GDP above 3%. That's a
mm,
huge figure, and which is why they fix their monetary policy through the exchange rate.
mm,
They have done studies over the past empirically showing that this is still pretty effective in terms
mm,
of monitoring inflation. So they would do what any central bank would want to do via the interest rate on the currency if there's
mm,
inflation risk. So for example, if they see important inflation risk, they would signal they would want the SGD near to appreciate, and vice
mm,
versa. I don't see them departing from that. They've already maintained a dovish bias so far this year. I was expecting them to ease further in their last meeting, which they have not done so. But I think, given the downside risks to growth, muted inflation, and the external risks that face Singapore, the bias would be for more easing.
right. Taking our attention to China Shock 2.0, Priyanka, how do you see the impact of the Shock 2.0 on the ASEAN economies, given the fact that you just mentioned that China is now the dominant trading partner of the region? There is fear that cheap imports would adversely impact these economies. Nevertheless, do you see any positive impact as well?
So China Shock 2 is a real challenge, Karan, for the
Mm,
region, because yes, it does have some positives. So I already said that cheap Chinese
mm,
goods help keep a lid on prices. Given that the
mm,
region has been struggling with cost of living since post-COVID and the Ukraine war. This has
mm,
become as a welcome relief to consumers. But the flip side of that has been that because these imports are so lowly priced and competitive, the local
mm,
firms have come under pressure. We have been inundated with news headlines of factories shutting down, layoffs happening. If we look
mm,
at the Indonesia dismissal figures, then they are up 42% just in H1 this year so far. So this is a huge impact that is coming on jobs and incomes
mm,
because of Chinese imports and also investments coming through. Now, ideally, you should have investments which come in and create more jobs in the region. But what's
mm,
happening with China is still a lot of their firms which come and establish themselves in these countries are importing goods from their suppliers sitting in China. So the additional
mm,
job creation is not coming through at this point of time.
mm,
That's
mm,
that's definitely a challenge. It's a challenge also for the governments who do not want to discourage Chinese investments because
mm,
they have little hope of US investments coming in at this point of time.
mm,
And we've also seen EU investments into the region slow down. So it's a tricky path. My view is that at least not all countries will retaliate to the same degree. So I think Thailand and Indonesia maybe have been hit harder, and we could see some more retaliation in terms of actual actions coming through. So everybody has been talking about a verbal pushback against this, but we have not
mm,
really seen actual actions outside of one or two stray dumping duties or something like that. But the
mm,
situation now seems to be worsening in Indonesia and Thailand. So maybe we see a bigger pushback through actual some sort of barriers coming through. But on the other side, we have Vietnam, which has been very accommodating about these flows coming in, even though it has hit their own
mm,
industries in terms of toys, ceramics, etc. They're welcoming of the
mm,
Chinese investments because they see
mm,
it as a route to the China plus one supply chain, which heavily
mm,
depends on the component supply chain sitting in China. So they don't want to
mm,
antagonize China because then China will use barriers like visa hurdles and blocking travel of its engineers to Vietnam, etc., to slow down that
mm,
process. And Vietnam doesn't want that. Malaysia is also on the Chinese side and has not been, quite vocal or hasn't made a lot of pushback against these
mm,
investments coming through. So the region is dealing on its own basis. Singapore is not that impacted because the goods that are coming in are low to mid value, which Singapore does not specialize in. It's a high tech
yeah.
producing country, so it doesn't get impacted by that much. In future, the bigger question is that China is now claiming back low and mid value manufacturing that it had yielded to other countries. And if
Mm,
China continues to do that and it's automating, so it's making them at a very competitive price. It's also helped by subsidies and government support and things like that. Now, if China
mm,
keeps that space and doesn't vacate it, then the development path of these countries become very challenging over the medium term. That's the China shock too. And at this point of time, I think we're still in a very initial stage of it. So countries are figuring out how to deal with it.
I think the other major problem with the Chinese supply chains is that, Priyanka, uh, they're basically based on re-exporting of goods, as you were also alluding to earlier. So no real job creation actually happens in a very significant manner. So, so if the ASEAN region is overwhelmingly dependent on China in the absence of US capital, that would not really create the kind of job growth that they think they can through Chinese supply chains. And I think the central banks would also have to pay heed to that because then growth maximization and inflation control or price stability is something that they have to manage. It's a very thin line that they have to tread, in my opinion.
I completely share your concerns, Karan, which is why I think the EU could play a role here. And we
Mm,
have seen some progress on that front on the FTA talks, although the
mm,
ASEAN-wide EU FTA has been languishing for ever. But if just looking at the economic parameters, which the central bank would also be looking at, is that EU has ceded space to China in terms of
mm,
trade and to US in terms of investments. Currently, US has the
mm,
largest FDI stock in the region. China is catching up fast. It's in the fourth
mm,
position from 10th or so a few years back, so it's catching up fast.
mm,
But the EU is not growing its presence in the region. But if the EU now pivots as well, because it is also dealing with US-China frictions and rising US protectionism and intensifying Chinese competition, it is in some sense facing the same challenges that ASEAN is facing. So if this
mm,
relation strengthens, then we could see if EU investments come in, the job creation and things like that happen. But I completely agree with you, and on the Chinese investments not doing what traditional investments are supposed to do, because they're very much
mm,
supporting the suppliers back at
mm,
home, and this is why there
exactly.
is a greater backlash against
Mm,
Chinese investments than when Japan did the same thing decades back. They built their companies here. The Thailand auto sector is Japanese, but they created a supply chain network around their auto firms that created jobs and livelihoods. That's the basic difference. And I don't know what's the because answer here, because economically, the laws of economics do not really apply to China in the sense that we cannot say that don't do this, because what they're doing is consistent with laws of economics. They're competitive. Of course, they get an edge from industrial policies. So I think that it really boils down to, at what point the Chinese government decides to pull back on its policy support.
Right. Circling back to US Treasuries and the yield curve evolution impacting Asian markets, Priyanka, do you think the Fed's monetary policy will continue to effectively guide yields as it has done in the past? Or is it becoming less effective, potentially requiring more aggressive stance?
I think with the Fed's independence coming under the scanner, we could see some breakdown in relations. We saw that the Fed cut in the last meeting despite raising its inflation forecast. The Trump administration is breathing down the neck of the Fed, and the labor market data is now circumspect in the US. All this taken together, the erosion of the institution could lead to a bit of difference in how markets in this part of the region react to the Fed. From a longer term yield perspective, I would also like to add that anyway, I think there is a breakdown underway, because central banks are increasingly stepping in to support these yields. And to that extent, we are seeing a fiscal dominance of monetary policy in Asia as well. Indonesia, again, is a prime example of that, where a burden sharing scheme that was introduced during the pandemic has been revived. It was introduced only as an one-off emergency measure, but now it has been revived to support the financing of Prabowo administration's huge spending that is in the pipeline. And the yield has stayed completely stable over the last 2 years in Indonesia, even as both the currency and the Jakarta Composite Index has come under pressure because of the fiscal risk. So we can already see that there are, at least on the longer end of the curve, there are other factors coming into play, which are domestic, and they distort the market relations.
Finally, Priyanka, before we end, keen on having your opinion on the ASEAN macros, how you think they would be evolving, and the kind of monetary policy that would be in store. I know you have talked about Indonesia and Philippines, but maybe you can give a more broader view of the ASEAN macros as you see them evolving in the current macroeconomic environment.
So ASEAN is also a fast-growing region, right, Karan? It's climbing up the growth table leagues, led by Vietnam. Philippines also displays a very strong growth. At the other end of the spectrum, we have Singapore, which is a developed economy, but still, consistently delivers growth between 2 to 3%. Indonesia has been always a mixed economy, although we said that it delivers 5% stable growth, but the underlying macros have not been that strong always. Thailand also, I would put in that bucket. I think at this point of time, politically, there is a bit of a flux in the region. In most of the countries, we are going through either government changes, or governments who are trying to be autocratic, or a loss of democracy, or some sort of flux, which impinges, as we know, on actual policy making in terms of infrastructure spending, how we are going to see those long-term growth projections being realized, human capital development. So I think that's the challenge with not that stable governments, or at least governments who have their eye on the ball in terms of how governance should play out in terms of achieving long-term growth objectives. There is a risk that the region regresses a bit rather than lifting itself. I don't mean a growth collapse by that, but again, ASEAN needs to grow faster than it is to cater to its young population. And there's a risk that that growth lift does not happen because the fiscal spending that comes through is not targeted or well planned. So that's the challenge. But there's also the GVC route, and ASEAN has shown that irrespective of its government, it is good at maintaining its GVC participation. The question now is that can you increase your GVC participation in a fragmented, globalized world, which is also becoming, highly digital. So you have to deepen your digital capabilities even as you continue to push on infrastructure, human capital development, and region integration. So there are a lot of tall asks in the future. I think the region will do well as it is, but for it to live growth and for it to maintain its leadership as a global value chain leading destination, more effort is going to be needed than what they've had so far. Because right now, they had these low hanging fruits, they had a manufacturing base in place, and they have capitalized on it. But as you start hitting resource constraints, you have to bring in economic reforms to raise your competitiveness, increase your labor productivity. That's the next ask for ASEAN economies over the medium term. The central banks, we have good central banks in the region in terms of the framework. Most of them are inflation targeting, and they've done a good job of keeping inflation anchored. But if you're going to see increasing fiscal dominance of central banks, then I think the inflation risks could come back to bite. That is what textbook economics tells us, and it has been proven every time that if the government starts making central bank decisions, it never ends up well. So I think that's the risk I would put on the radar for ASEAN.
Very insightful, Priyanka. Well, that's all I have for today. Thank you very much, Priyanka, for joining us and taking out the time from Singapore. It was great speaking with you.
Thank you, Karan. It was great to be on your show.
Thank you.